You ever wake up, check your portfolio, and just see that deep, deep red that makes your stomach literally drop? Well, imagine that, but then you see a headline from Bloomberg predicting not just a little dip, but an absolute catastrophe. That's what's happening right now in the crypto markets. It's pure panic. So let's get into why the most reliable investing strategy of the last 15 years might be completely and totally broken. For as long as most of us have been in this game, this was the golden rule, right? The market drops, you buy, and you get rewarded. It felt automatic, like an infinite money glitch, a cheat code that just couldn't fail. It basically trained an entire generation of us to see every single downturn as just another sale. But what happens when the game changes? What if the developers patched the glitch? That's what a growing number of analysts are screaming right now. They're warning that the cheat code has been disabled, and anyone still trying to use it, well, they might be walking straight into a trap. And that right there is the fear that's absolutely gripping the market today. So, what was the trigger for all this? It was a bombshell report from Bloomberg that sent shockwaves through a market that was, let's be honest, already on shaky ground. See, investors were already getting nervous after Bitcoin tried and failed to break that crucial $70,000 level. This report, it was like throwing a match on a pile of gasoline. And this is the number at the heart of all the panic, a 90% drop. The Bloomberg report laid out a scenario where Bitcoin wouldn't just correct, it could plummet to a tenth of its peak value. We're not talking about a 20 or 30% haircut here. We are talking about a potential 90% wipeout. And here's why that number is so powerful. It's not just a technical forecast. It's a psychological virus. Think about it. The market already failed to show strength. Confidence was paper thin, and then this prediction just spreads like wildfire. It completely flipped the script from fear of missing out to, oh my God, get me out now. Now here's where things get really, really interesting. We have to look at how different groups of investors are behaving. Because when you break it all down, you see a story that is way more terrifying than just a price chart going down. Let's look at the little guys versus the big money. First up, let's talk about the ants. It's a nickname, mainly from South Korea, for individual retail investors. The everyday people. The Korean market is often seen as the canary in the coal mine for crypto. These investors are known for being some of the most aggressive, most optimistic buyers on the planet. And this is where the alarm bells start ringing. The ants, they're fleeing. They are cutting their losses at record rates, which tells you their belief, their faith in the market is cracking. But here is the absolute kicker. The whales, the big institutions, the huge holders, they aren't stepping in to buy the dip from them. No, the data shows they're selling too. They're actually using all this retail panic to get out of their own positions. So when the big money refuses to buy the dip, you really have to ask yourself, what do they know that we don't? And the result of all this is, well, you can see it right here. The Fear and Greed Index, which is basically the emotional heartbeat of the market, has had what you can only call a sudden cardiac arrest. Optimism hasn't just faded, it has completely collapsed. Greed is at zero. Gone. Vanished. Replaced by pure, overwhelming, extreme fear. Okay, so this brings us to the biggest question of all. Why is this happening now? Why is the old, reliable strategy suddenly failing so spectacularly? To figure that out, we basically need to perform an autopsy on the entire buy-the-dip era. See, the whole buy-the-dip mantra was really born out of the 2008 financial crisis. For more than a decade after that, central banks just pumped tons of cheap money into the system with super low interest rates. That meant every downturn was immediately followed by a new high. But those days are over. With interest rates way up to fight inflation, that safety net of cheap money has just been yanked away. One analyst put it perfectly. The warning is that if you buy this dip, you're not catching a falling knife that you can maybe grab onto. No, you might be trying to catch a falling anvil. We could be heading back to a real, old-school bear market, where things don't just dip for a few weeks, they stay down, and they stay down for years. So, this all leads to one single critical point. Right now, the entire market is just holding its breath, staring at one specific line in the sand. This is the moment. This could be what determines that this is just a bad correction, or the real beginning of a long, cold crypto winter. And that number is $56,000. According to the chart watchers, this is it. This is the final critical line of support. If Bitcoin can somehow hold this line, maybe the bulls have a fighting chance. But if it breaks, well, that's the trapdoor. And that crazy 90% crash scenario, suddenly it doesn't sound so crazy anymore.
And that leaves us with the ultimate question. This isn't just about what the price is tomorrow or next week. This is bigger. It's about whether the fundamental rules of the game have actually changed for good. Because if the buy-the-dip era is really over, it means millions of investors are out there using an old, outdated playbook, and they're running straight for a cliff.